Hi everyone. It's about 5:45 on Wednesday. This is your closing comment. It's video number 490. And if you like the work, I'd always appreciate if you'd hit that subscribe button. Okay, tonight I'm going to go a little bit off topic. Um, the market was horrendous. I can tell you without giving you all the details, Pinterest beat, and it was up 15 or 20%. Ford beat, General Electric beat. Uh, that said, uh, there were obviously more and more extreme moves to the downside. So, what exactly happened today that took the Dow down 943 points or 3.4%? NASDAQ down 426, S&P down 120, Russell down 47.83 for a 2.98%, which was the better of the top four. And the biggest loser was the transports, down 485.99 or 4.25%. Well, it was pretty simple. First of all, the market internals were terrible, and they have been not great for several days. In fact, if you want to look at it on the grand scale of things, considering the move up we had, they were never particularly good. We also had the VIX up while the market was also up a couple of days last week, not this week so much. As I said, advanced declines 10 to 1 to the downside on the Dow, 6 to 1 on the NASDAQ, and the volume was a little higher. What does all that mean? It really doesn't mean all that much, except to say that when the big tech names are down, 80% of the time, the S&P is down because they're the biggest representation. All that said, that's about it that I'm going to tell you about stocks tonight. What I'm going to tell you is that today and yesterday, what has happened is Main Street has finally caught up, or put it the other way, the market or Wall Street has finally noticed that Main Street is suffering terribly. The biggest issue here and the biggest decline today was basically in energy. This is the chart on the screen is the oil, and as you noticed on the weekend and then again yesterday, I drew in these two arrows because we were in an area where we had not been able to get through, same as the area here, and we were rolling over, and all the moving averages, just like they were doing here, were also rolling over. So basically, we couldn't get through 42. I think the high here was 41.90, and so today we closed down $2.15 at 37.39. Why does that matter? Well, it's a symptom, and it's a major issue as it relates to how business is being done and the effect that COVID is having. When we have the kind of numbers that we saw in Europe and the kind of numbers that we've started to see here, it's pretty much impossible to not take note. Um, you know, uh, Airlines are not acting well. Cruises, obviously, the same. And one of the main reasons, which I've harped on a couple of times here, is why would I get on a plane? Why would I care whether the air is filtered and it's one of the safest places to be if you're wearing a mask? There's nowhere to go. Business does business on Zoom. It does documents on DocuSign, and there's not a lot of reason for you to get on a plane and go anywhere. You can't stay in the hotels. Who knows? When the room was cleaned, how well it was cleaned, etc. And I'll mention, in view of what Germany, the biggest economic engine in the EU, did today, that it really shows that that's an issue. Um, German hotels, well, let's start at the start. Businesses, restaurants, bars, movie theaters, gyms, as of Friday, will be closed for a month in Germany. France came up with basically the same idea 2 hours later, same situation. They're letting it go till Monday. You can't stay in a hotel in Germany if you're a leisure traveler. The hotels will only be open to essential workers so that they don't have to commute. So when we see that kind of a pickup and we see an economic slowdown, the first place we start to see it is in energy. And that's why 37.39 down $2.15 is major. The dollar was up a little today. It had been up higher. I think it closed up about 48 cents, and it had been up substantially more. Yeah, 93.41 essentially. And it had traded as high as 93.66. So it didn't close on the high. It had a decent move here. I mentioned it this morning, going through these tops for the next couple of days, but it still is not a healthy market. Gold was down 32.70, 1879.20. A couple of days ago, I made mention of the fact that it looked to me like if we didn't go through on the upside, that we had a good chance of breaking in the gold. And that's pretty much what we got today. The silver was a little better, and we're long the silver. The silver actually closed right on that rising 100-day moving average. The gold went right through it. What I said the other day is, if we can't break through these highs in this 1915, 1920 area, that looks like we could go and test 1850. The reason that the gold was down had nothing to do with the dollar today. It had to do with the liquidation of assets. A lot of times when the market gets hit the way it did today, people want to hold on to the ones that they think will work out, and they sell the ones that they have profits in because they don't want to jeopardize the profits. And so that's why on a day where the dollar really did nothing, gold had a fairly major move. The Bitcoin, we sold out of the last third of our position in Bitcoin, and I actually didn't want to do it, but that was the percentage play against that 14,000 area. We got to 13,870 today, another new high, and then we came down and made a lower low than yesterday and closed down 510 on the day. GBTC is the proxy that we use for that, and it was about $15 at the close, down about 80 cents or 60 cents. The point in all this is that the big companies have no issue at all when it comes to liquidity and solvency. They can draw on credit lines, they can issue bonds, they can even do a secondary and issue stock. And while that may, in fact, dilute shareholders a little, it's not really the issue. The issue here is that we are a nation of consumers, and I don't mean to say that in a negative way. I'm just saying we don't do as much manufacturing as we used to do. We're service oriented, and the problem here is small business. And when I say small business, you need to understand small business is the big business of the US. I know that that sounds a little hokey, but the fact is there are many, many, many more small businesses than there are big cap, mega cap businesses. And the problem there is that a lot of them have been closed. A lot of them remain closed. A lot of them will not be back ever. Um, you take a business like restaurants and you realize that restaurants will not be able to make money at 25 or 30% capacity. They'll be lucky if they make it at 50% capacity. They need less service people. They need less servers. They need less cooks. They need less of everything. And so people lose their jobs. And that's why I said that Wall Street and Main Street have finally come back into some kind of relationship, unpleasant as it may be. All right, everyone, I'll get off my soapbox. And I assume that we have plenty of earnings again tomorrow. And we also have initial third quarter GDP. And so we'll have to see how that works. I will say that I would expect with a close this close to the low, essentially on the low, that we will see follow through tomorrow. Here's the S&P. And the next real support in the S&P is, well, let's just call it these closes around 32 and a quarter. That's not far from 32.75. I mean, I know that it sounds kind of strange. It sounds strange when I say it, that a 50% move in the S&P, a $50 move in the S&P tomorrow isn't all that extreme, considering that the S&P used to have a $5 range in a day, and that would be a big move. So 32 and a quarter, 31.98, the area. This is a pretty good area since, as you can see, clearly it's where we had the most recent breakout back to the upside. Right here, 3,200, 31.90. 1, 2, 3, 4, 5, 6 times, 6 weeks. And it looks like at the open tomorrow we may hit that. So I'm not going to tell you that the market's a buy. It's way oversold, and there are stocks that, will turn up, and we may make another run back to the upside. But it's absolutely something that you're going to have to play in appropriate size. And as far as I'm concerned, that means smaller than you would normally play. And keep a close stop. Have a good evening. I'll be back in the morning.